There's more news crossing with the Facebook IPO. We're learning that they're going to pay bankers about 1.1%, which is a pretty low fee for an IPO. It shows you just how desperate the bankers were to get in on this deal. But it's a kind of a hot deal. It brings lots of new customers. And I guess that's the big question now. What's this deal really worth? And what are investors, what should they be paying for it? How do they come to that conclusion? So we're joined by Francis Gaskins, as well as Bhatia of Stern Agee and Leach. Arvind has a price target of $46 on this. Francis Gaskins has a different view on this. Francis, let me start with you. What's your take on this company and this IPO?
Well, it's an 8-year-old company. They shot for the moon. They got the stars. I think in this particular IPO, it's the biggest pump and dump in history. And the reason I say that is when they first did it, it was going to be a $5 billion IPO going to, and the money going to the company for growth. Then it's a $10 billion, and now it's a $16 billion deal, where $9 billion goes to selling shareholders, and that more shareholders would sell if they could. So what do they know? They know a lot more about Facebook than I do, than you do, and they're stampeding towards the exits.
Well, all right, Arvind, what about you? You've got a higher price target on this thing than the offering price. How do you get to that target?
Well, clearly, to get to that target price, we are hoping that the trajectory that Facebook is on today will continue into the foreseeable future. We certainly look at this as the next Google, and we think that they're sort of in the very early stages of figuring out the code on the advertising market worldwide. So they're not only disrupting the advertising market, but many other industries. And so this is, I think in the big scheme of things, this is one of those stocks that a lot of large cap growth portfolio managers are going to want to own. It's going to become a core holding. So we see our valuation is based on 30 times next year's EBITDA estimate. We think EBITDA is growing at about 30% a year.
Well, so you really see a re-acceleration of this business away from the trend that we've been seeing, where EBITDA margins have been shrinking, where revenue per customer has been shrinking, where user growth has been slowing?
Well, look, I think one of the things that you're facing here is the law of large numbers, and I think we fully expect these kinds of trends to be up or down, up and down from time to time. This is not going to be a stock you want to own necessarily for the next quarter or next 2 quarters, and so I think especially retail investors who are going to want to see the stock go up every quarter, they may be disappointed. I think this is more for institutional investors who can own the stock for the next 2, 3, 4 years. And again, if you look at the history of Google, it started at $85, right now trading around $600. It always looked expensive. Valuation was always a concern, but again, they were in the midst of disrupting the advertising market back then. They continue to do that with search, and Facebook is going to do the same thing with social.
Well, now to that point, Francis, let me ask you. I mean, I talked to an investor the other day who told me he was getting an allotment of shares, and I said, won't you flip him the deal? He said, I didn't flip Microsoft. I owned that for years, and this could be the next Microsoft. Do you, when you look at this business, and do you look at it as the time to own it is now and for a long time?
No, I think people are nuts to own it if they can sell it in the aftermarket, because I think what GM did is I think that probably froze the advertising growth for Facebook this year. I mean, if I were an advertiser for Fortune 100 company, I would say, okay, fine, let's keep the current ad budget there, but let's not increase it. So I think Facebook can pretty much kiss goodbye. It's in big increase in advertising revenues this year. The thing about mobile is people spend 7.5 hours on the average on the mobile per year. I mean per month, and the time to get the revenue from there is now, not later. If they haven't figured it out now, they won't. I mean, when I hear the people talking about if this, if that, I mean, it sounds like it's a venture capital deal. I mean, we have a $100 billion deal. You want to see strategic growth. And I think talking about strategy, I think Zuckerberg is not a good strategic person. I think that he designed this for the desktop environment. I think things changed rapidly to mobile. And what I point to is they filed the S1 February 1st, and they only started testing mobile in the middle of March, which is 5 or 6 weeks later. And in a way, that's all you need to know about their strategy. They don't have any.
Yeah, no, it's interesting. I remember seeing Mark Zuckerberg speak, I think it was fall of 2010, saying we'll never release an iPad app. So clearly that wasn't part of the plan. They, of course, since have done that. But it also sounds like you don't give them credit. I mean, they have succeeded over and over again in the things that they've done. Should we just assume they won't ever succeed again?
The future is the past is the past, and I think when you have $100 billion, yes. because I just don't think they can reinvent themselves. I think they're trying to reinvent themselves. I think they're throwing a lot of things on the wall. It's not working. I don't think mobile, they're ever going to be profitable. I don't think mobile's ever going to work for them. I think they really screwed up their advertiser base by losing GM. I mean, they've got significant problems, and Zuckerberg says, trust me. Well, you can't trust, you just can't trust him. The thing about Zuckerberg, he doesn't know what he doesn't know. I mean, if you're worth $20 billion, what else do you need to know? You don't need to know, and he doesn't know anything about that. The other thing about Wall Street, he's the bad boy of tech. I mean, he loves to thumb his nose and stick it in the eye of Wall Street. You don't do that. I've discussed some of the problems. He's going to need the support of Wall Street. People are going to have to believe his estimates based on his behavior. I wouldn't believe his estimates.
Yeah. Arvind Bhatia, what about you? When you look at Zuck's behavior and Zuck's iconoclastic approach, does that give you pause, or do you say it worked for Steve Jobs, it could work for somebody else?
Yeah, I think that's exactly why you want to look at this company, take a hard look at this company. This is not your typical run-of-the-mill company. This is, again, revolutionizing many industries. And I think when you look at the overall opportunity, the $600 billion market, if you're a top 100 company and you've got $1 billion in advertising budget, I believe if today you're spending only a couple of $1 million, you're going to be spending 5–10% of your budget on social. And I think a big part of that is going to go to Facebook. The problem right now is advertisers are also trying to figure out what the best way is. To counter the point on GM, Ford and a couple other people came out in the last few days, and they said they're having a great experience. So I don't think you can take one example and extrapolate that and say, well, that's the whole story. It's not.